Everybody, welcome. It's Pete. Welcome to today's episode of Today's Best Stock Picks. It is Tuesday, May 19th, 2020. Market actually had some amazing follow-through yesterday. I think a lot of people sitting home day trading were wondering when the gap was going to get filled yesterday, and you missed out on a lot of good opportunity yesterday. What somebody might call easier trades where the direction was blatantly obvious. There was no reason to look to the short side. And you could have literally just held on to your day trades for the ride yesterday. There really wasn't a lot of pullback. But today we're going to focus on one particular sector. First, we're going to talk about why I had that opinion, because that's really the biggest part of these videos is why should you have conviction in a particular side of the market, how to manage that position on a particular side of the market. Then we're going to talk about your conviction level in those particular trades that follow through like that. And we're going to start out and stick with one sector today. We're going to talk about the financial sector because guidance, quite honestly, on earnings has not been good. But yesterday was a tremendously bullish day. And again, it's only one day. And the question is, how do you trade it today? How do you take a look at those stocks today? Some of them are super strong. Some of them have been relatively weak. And how do you trade each side of the market after yesterday had a monster move to the upside? Before we get a little further into today's earnings on the calendar, some significant earnings. We have Walmart, Home Depot, and Kohl's. So WMT, HD, and KSS. So what we're going to do is we're going to go to the charts. First, we're going to take a look at the individual sector that we're going to look at. We're going to see how diverse they are over the last week and the last month. And then we're going to go to the charts and take a look at them. By the way, thank you everybody who wished me well for my wedding. I'm a married man now. If you like these videos, absolutely click down, click subscribe, give us a thumbs up. Any stock you'd like to see us look at in the future, also, please let me know in the comments and we'll get to it as soon as we can. So we're going to dive right into it. We're going to focus on this window down here. You can see some of them over the last week. Well, let's actually go to yesterday. Yesterday, they just absolutely lit up. Most of the market did yesterday, obviously, as we just discussed. But I want to talk about the week, and then we're going to compare the week to the last month. So you can see they're not all super positive, specifically Goldman Sachs, JP Morgan kind of neutral. But over the last month, the picture changes dramatically as well, where JP Morgan has been a stock that we've been short selling. I've been short selling on rallies, and yesterday was a rally. And depending on what happens today, we're going to take a look at that. So I'm going to pull this off the screen so I can take a look at it. And then we're going to get into these groups of individual stocks. So we're going to start out by taking a look at the XLF, excuse me, which is pretty much in a trading range. You could definitely make a case for lower lows and lower highs here. But if we're game planning this thing together and we're sitting in, excuse me, apologize, in my trading office and we're looking to game plan it, I'm pretty much saying that this is really not doing anything. We're kind of stuck in this window right here. We blipped out a little bit, blipped down, and came right back in. So that's kind of the right price. Now, I use that terminology all the time, the right price for the XLF. So we're not really seeing a serious bias here at all. Now, that's the ETF. It's a little bit different when we start to get into the stocks. You can see that here's the last earnings report for JP Morgan, and most of the closes have been below the open, represented here by red candlesticks. So you can see it actually was drawing this trend line after earnings to see when we might get a big break. And we did get two really solid short selling opportunities last week. But then we had this bullish U-turn followed by an inside candlestick. And you can actually make a case that that's a bullish engulfing candle, where the entire day the short sales got caught off, and the next day we actually closed above the high. And generally happens is one side of the market on these bullish candles, on these engulfing candlesticks, gets caught. You get caught by an inside day. You're like, oh gosh, I hope it does what it's supposed to do and come back down, what you want it to do if you're short. And you get stuck on one of these days. But here's what I'm saying. As you can see, every one of these higher openings, for the most part, higher opening has been a short sale. So closing or opening near the highs has given opportunities to short sell. So now we actually have a bullish engulfing inside candle to bullish gap that followed through and closed near the highs in JP Morgan. I am still looking for a short sale in JP Morgan until I see a reason not to. Now, short sales have been very hard to find. And again, that's a whole other good conversation to have, because should you even be bothering looking for short sales? And probably not. But when one sector or one industry keeps doing the same thing over and over again, in this particular financials, there's been some really good movement to the downside, and it's mostly been playing out intraday. I'll just, I don't want to turn this into day trading, but you can see here, even yesterday, the higher opening pulled back and came down for $1.50 within the first half hour, 45 minutes a day. And that's not a bad profit considering the market gapped up and was going sideways for an hour. And if you were in the community yesterday, you saw me call it out early in the day and actually call it out. I closed out the position on this inside candlestick here on the 5-minute chart. So I'm still looking for a spot to short. This could change if we close above here, but looks like we're going to open lower here. What I'd really like to see is a flat opening, a push higher, exhaust itself, and then for the selling to come back in for me to want to participate. Now, Wells Fargo over that same time period, actually a little bit more weak. We had one gentleman in our coaching, in our private Slack community call us out for a couple of weeks. He kept saying, wait. We finally broke down. You can see 1, 2, 3, 4, 5, 6, 7 days in a row where it finally closed below the open. Last week gave us some really good short selling opportunities. But again, another bullish engulfing candle, pretty close to it, maybe not. Inside candle followed by a gap. So there's one side of the market that is caught on the wrong side right now, and that's the shorts if you're holding that swing trade. So we might get a little bit of a short covering rally, but I still prefer the short side in both of those stocks right now. That could change, but that's all what trading's about, right? So we'll get a little bit more into the picture here. American Express kind of doing nothing. I want to see it break out of this window. I'd like to see it trade above 93 or convincingly below 80. So again, being disciplined, setting those levels. Goldman Sachs yesterday was just, again, on the daily chart, not much going on. They were setting up levels that we'd want to trade. I want to see it get above 190 and stay there. But look at this 5-minute chart yesterday. My gosh, from a day trading perspective, again, this is 1 day of trading. Don't read too much into it. It's 1 day. It could start something bigger, but it joined the entire market in the bullish environment yesterday and just had a phenomenal day of trading for somebody. If you get, it's even more stark, believe it or not. Look at this 15-minute chart and how well bid it was. But again, I can't point out strongly enough, and this is something everybody needs to learn to really up their game, is how obvious has it been for how long? That's obvious yesterday for maybe 5 hours, right? But here's the bigger picture. Again, it's crystal clear that nothing is going on here, right? Flipped out, came right back in. Flipped down and came right back in. So that's right now, that's the right price. It is not obvious at all. That was a 1-day trade. We need to get above this level, which looks like around the 190 level, to have some conviction there. But then there's stocks on the other side of the equation that are super obvious. I'll start out with Square, where you can see this has had crystal clear push, pause, push, pause, push, pause. And now we're having some resistance up here at 82.50. I don't like it until we get above that level again. What I would like to see is if we pull back for another day or two, have a big red candle, and then look to retest the higher levels up there around 85, 87. I'd like to see you get through there. But PayPal tells an even better story where we are gapping through and just seeing historical levels being hit. We finally got above this 7-day trading area yesterday, although we came back, saw some profit taking. What I'm looking for today is a test of yesterday's low to find support to look for the next leg higher. So obviously all-time highs, you have to be looking for new longs there as well. Capital One, COF, again, very similar. I want to keep pointing these out because not every trade we're going to talk about is a trade. It's more recognizing the situations that you should stay away from where there is not a big edge, but you still need to set your alerts for if they do hit a certain level, you need to be on top of those. And that was actually a big part of our private coaching call last night, which we have every Monday night. Recognizing when something's super obvious and has room to go versus yesterday was only 1 day of trading and your conviction level should not be the same as, so let's say for argument's sake, in a different sector, something like NVIDIA, or like we talked about before in a previous video, DDOG, where absolutely, has some serious price action to have a lot of conviction. So sticking with that sector, we're going to take a look at Visa. Visa, nice 20-day breakout. The problem is you're trading and gapping straight into this resistance level. So I'm actually looking for a higher opening here to see profit taking and then consolidate. I'd love to see it consolidate around this 194 level, looking for the next trade to go up to 216 for the next swing trade. and MasterCard as well, very similar to Visa. Resistance a little bit further away, but very similar type of setup there. So I really like those stocks as far as how long we should be holding them, which stocks we should be staying away from because it's only one day. Now, when I say stay away from, I mean that we're not looking to hold them as longer term swings because really only one day of price action in the middle of that trading range. Can you still day trade it? Sure, absolutely. Yesterday was a tremendous trade, but here's the thing. Is that the best trade you have on the board? You have to start out with your A-plus trades where more money is doing the same thing, where the market, your sector, and stocks in that sector are all doing the same thing, where all that rope is being pulled in the same direction, and it makes the trades much easier. So you need to make that distinction between how much conviction, where's your conviction level from your A-plus trade away from that, and the certain financials were strong yesterday, which ironically Goldman Sachs, JP Morgan found buyers yesterday, even Wells Fargo, when the stock PayPal, which was making all-time highs, actually was met with selling yesterday and closed on the lows. So that's where you start to get your conviction levels, and then you need your intraday or swing trading significant reference points to read the tape to determine if you want to be long now and for how long do you want to manage that position. So we're going to focus on the financials again today and in this week because they seem to have woken up a little bit. It's a question of whether or not we open higher, look for sell short, or in PayPal's case, whether or not we test yesterday's low, look for a new swing trade long because we've cleared that most recent resistance level. So that's what we're going to be looking at today. That's going to be one of my main focuses today. So have a great day, everybody. Thanks for joining me.